Good morning. You're very welcome to today's webinar, How PAYE Modernisation Will Affect Your Payroll Bureau. We've just completed a sound check there 10 minutes ago with people who had logged on early. So far there's no issues with sound, so we're going to get started. Today's webinar will give you 1.5 hours of CPD hours. If you would like a CPD cert, please complete the survey at the end of the webinar and we will send your cert to you in a few days. Throughout the webinar, please type in any questions you may have into the question tab on your control panel, and we will have a Q&A session with our panel discussion. Today's session is being recorded and we will email you a copy of the recording if you need to pop out for any reason. So we have designed today's webinar to give you an understanding of how PAYE modernisation will affect your business and what impact it'll have on the running of your payroll. PAYE modernisation will involve the most significant reform of the PAYE system since its introduction in 1960. Employers will need to calculate and report their employees' pay and deductions as they are being paid. This will make it easier for revenue, employers and employees to ensure that the right tax is deducted and paid at the right time. We have 3 speakers presenting today's webinar. First up, we have our very own Paul Byrne, who is the Managing Director of Thesaurus and BrightPay. After qualifying as a Chartered Accountant, Paul went on to set up and manage his own accounting practice. Paul co-founded Thesaurus Software in 1991 with the goal of providing payroll software to Irish businesses. Thesaurus Software now provides quality software products and excellent customer service to over 100,000 businesses across the UK and Ireland. Welcome, Paul. Next up, I'm delighted to welcome Sandra Clark, who is a partner at BCC Accountants and a council member of the Irish Tax Institute. Sandra is on the front line when it comes to helping her clients through the new PAYE modernisation changes. Sandra will join us for our panel discussion later. Welcome, Sandra. I'm also delighted to welcome our next guest speaker, who is Sinead Sweeney. Sinead is the PAYE Modernisation Change Manager for the Revenue Commissioners. Sinead is very much on the front line when it comes to PAYE modernisation and will also deliver a presentation today from Revenue's perspective. So welcome, Sinead. For our panel discussion and Q&A session today, we have Paul, Sandra and Sinead. We will also be joined by Audrey Mooney, who is the support manager here at Thesaurus Software and holds various qualifications in payroll management. So we also will be joined by Victoria Clark, who is another one of our support managers, and Victoria will take you through a demo of what PAYE modernisation looks like in the UK, who've already rolled out a similar system. So I'll now pass it over to Paul to begin today's webinar. Thank you and enjoy.
Thanks very much for that, Karen, and welcome everybody today. There on screen we have the agenda for today's webinar, so it's fairly packed. So I'll crack on with it now. The agenda itself is broadly, first of all, the first part is how will PAYE modernisation affect your payroll bureau, and then the second part is Sinead's presentation, and then we'll have the questions and answers, which will also be like a panel discussion. So, first of all, what is PAYE modernisation? Well, it's probably the biggest overhaul of the PAYE system since PAYE itself was introduced back in 1960. So it's a little bit older than me. And so just to mention as well, for any of you who were on our previous PAYE modernisation webinars, there will be some duplicate content to what you heard in the last webinar, but I've tried to keep duplicate material to a minimum. So for those who have previously tuned in, this is both a refresher and an update. Okay, so what is PAYE modernisation? Well, currently lots of employees are being given the wrong tax credits and cut-off points, and this is because Revenue only gets payroll data once a year in the form of the P35. So receiving the data in real time will ensure that Revenue can allocate the correct credits, thereby avoiding any over or underpayments of tax in as much as possible. Revenue will know where the taxpayer is working and how much they are earning. Many employers are not operating PAYE correctly in that they don't register new employees or they use out-of-date tax credits. And this is what is hoped to be addressed by PAYE Modernisation. In a nutshell, essentially a file much akin to like a mini P35 will be submitted electronically to revenue on or before each pay run. In most cases, this means a file will be submitted either weekly or monthly. Also, the retrieval of tax credits, or P2Cs, will be automated, which should ensure that the correct credits are being applied by employers. There will be no more P forms. At the end of a tax year, the individual taxpayer will be able to view and print their official certificate of earnings and deductions directly from their revenue portal, their My Account. So this means that P60s should no longer be required. The files being submitted each pay run will have details of employees commencing and employees leaving. So this will mean that P45s and P46s are no longer required to be completed by the employer. And as revenue will be receiving file submissions each pay period, the annual P35 will no longer be required. In addition, this periodic file will eliminate the need for P30s. Just looking at the file specifications now, with PAYE Modernisation, the new files are called, it's a revenue payroll notification, which is the main, that's like the mini P35. Or sorry, no, I'm getting that wrong. The revenue payroll notification is actually the request for P2Cs, the tax credits and cut-off information. So RPN, you'll hear a lot about that. That's, in other words, that replaces what we previously referred to as P2Cs. The other file is the payroll submission request, which again I'll refer to sometimes here as a mini P35, and this will be used to submit payroll data to revenue each pay period. So the full file specifications are included in the links there on the screen, and we've also included them in the handout section of your control panel if you wish to download them. So just a few points or a few items to note as to what is and what isn't included in these forms. So firstly, looking at the RPN date items, which as I say is akin to the P2C at present. So as you probably already know, illness benefit will no longer be notified to employers by revenue, as revenue will now adjust an employee's tax credits and cut-off points. So this means that payroll operators will no longer need to worry about taxing illness benefit. The only downside to this is that many company sick pay schemes require details of the amounts being paid by DSP, or I should say DEASP. These details will now only be available from the employees themselves, which may or may not be sufficient proof for the relevant schemes. Accordingly, employers may need to review their staff handbooks and policies for this new regime. Employees will be able to log on to their My Welfare account and get printouts of illness benefit received. So this might also be an option for those sick pay schemes in terms of proof. Another item on the RPN is employment ID. And this is possibly not relevant to 99% of employees. The 1% that it is relevant to are those employees who have multiple employments with the same employer, and those employees who cease with an employer and are then re-employed by the same employer in the same tax year. So the purpose of the employment ID is to distinguish between these employments so as to ensure that the employee's tax credits and cut-offs are allocated correctly. One of the problems at the moment is that some of these employees are receiving their full tax credits and cut-offs for both employments, meaning that they're not paying enough tax, obviously. So the payroll software will handle these IDs in the background, but we will also give you the facility to override them if you wish to do so. Turning to the actual payroll submission request, in other words, the mini P35, one of the items that will be needed on this is the actual RPN number itself. So the details provided by revenue in the RPN will also include an RPN number. So this same RPN number will then be included on the periodic PSR. So this will show revenue that the employer is applying the most up-to-date tax credits and cut-offs for the employee. Another item on the PSR is gross medical insurance paid by the employer. And this is of interest because at the moment the current P35 looks for the amount of medical insurance eligible for tax relief. And this information is not always readily available because you kind of need to obtain it from the medical insurance provider. Fortunately, the PSR specification is just looking for the actual amount paid by the employer, as in the amount which gives rise to a BIK. Another item on the PSR is the expected number of pay periods in a full year. The notes on the file specification states that this is used to determine whether a week one or cumulative RPN should be provided when an employee moves jobs or pay frequencies. My own take on this, and I suppose it's a bit of a conspiracy theory, is that this same information could be used by revenue to make considerable savings on what week 53 currently costs them. At present, if there are 53 pay days in a tax year, as you know, the employee gets an additional week's tax credits and cut-offs in the week 53. From 2019, the software and employer will need to know from the start of the year how many pay days there are. If there are 53, then the year's tax credits and cut-offs may be spread over the 53 weeks, as against being spread over 52 weeks, with an additional week being given in week 53. Okay, so just in terms of, I suppose, in terms of us getting this particular presentation CPD accredited, we need to do a poll, and this is the only poll we'll do on this particular webinar. So what we want to know is, what does RPN stand for? Is it A, revenue payroll number? Is it B, real-time payment notice? Or is it C, revenue payroll notification? So at the moment there should be a poll on your screen, and you can just tick which option you think is the correct answer. Okay, the results are in there, and I can say that actually 75% chose the correct answer, which is C, revenue payroll notification. Okay, so what direct effect will this have on employers? Okay, instead of the yearly or annual P35, there will be like a mini P35 submitted each payroll run, and this is the payroll submission request, or the PSR. That'll be automated within the software, and we'll show you that later on in terms when we show you how it works in the UK. The next thing is checking for updated tax credits and cut-off points will also be an integral part of each payroll run. And again, we'll show you how that works in the UK. It's a kind of like a one or a stroke two click process. At the moment, as you know, obtaining details of P2Cs through Revenue Online service can be fairly manual process. The next thing is that the mini P35 or the PSR will also contain details of employees starting and employees leaving, so that, as I said earlier, that cuts out the need for P45s or P46s. According to some research, it shows that businesses across Ireland have broadly welcomed the impending introduction of real-time reporting, or PAYE Modernisation. And I suppose this is because the reporting processes by employers to revenue will be fully integrated into the employer's payroll run, and this should contribute to significant streamlining of business processes and reduce the administrative costs. Again, we'll show you how that operates in the UK later on in this webinar. And just now having a look at how it affects employees, and this is probably one of the big differences between Ireland and the UK. In Ireland, employees will be able to log into revenue through their My account, and they'll be able to view what has been submitted on their behalf in relation to them by the employer. So effectively they'll be able to log in and see kind of like a pay slip for each pay period. It won't be a full pay slip, it'll be like a pay and deduction statement, because there'll be a lot of things that a full pay slip would need to have that this won't have. But it'll basically show the pay and various tax headings that have been deducted for them. The other thing they'll be able to do under the new system is employees will be able to allocate their credits and cut-offs between multiple employments if that applies to them. Also, I think through the Jobs and Pension Service, and when this is currently in existence already, revenue can be informed of changes in employment. At the year end, employees will be able to view and print their official certificate of earnings and deductions. And this is something they will probably do if they're looking for a mortgage, or if they need to give to any loan institution or whatever. So this would be a new thing, that the P60 has effectively been replaced by this earnings and deductions certificate. Possible downsides for employers. The first one there is administrative burden, and some smaller businesses have expressed concerns about this. Now, I'm not actually sure whether I'd agree with that, because really the new system, if the employer is doing things, on a timely basis and doing their payroll when they should be doing it, rather than a few weeks after the event or whatever, it'll actually be very smooth. It'll just be one or two clicks in the process, and I would have a disagreement with that particular conclusion. The other thing is limited access to internet connection. Yes, that is something that is a real concern, especially in some fairly remote areas of the country. The other thing is investment. They need to invest in a payroll software, or invest in basically taking on the service of a payroll bureau such as yourselves. Now, again, I think anybody who employs staff, or one or two or more staff, most of the payroll software solutions out there are very reasonably priced, so it's a petty cash item, more or less. The other thing is the time, we feel, is the time-saving benefits of payroll software should outweigh any financial investment in that software. And here's how the time savings come into effect, and it's basically as a result of the APIs in payroll software. An API stands for Application Programming Interface, and this enables different software applications to communicate with each other. So in our case, it allows our payroll software to directly interact with revenue systems. So instead of the very manual routine of downloading or uploading, selecting file locations, logging in screens, etc., there would hopefully be just one submit button to replace all of this. For example, say look at how the tax credits, the P2Cs, are retrieved at present. You log into your ROS account, you go to the Revenue Record tab, you then select P2C details, you then search the relevant tax year, then you export, which involves choosing where to save to. Then in your payroll software, you go to the relevant P2C import section. You need to select the correct file from the correct location and then import. Even though this is software, by my count, there are at least 9 to 10 steps involved there. So with the API, it should just be one click or maybe 2 clicks to achieve all of the above. Similarly, with the periodic payroll submission, or the mini P35, the actual transfer of this data to revenue should also be just a one-click process. So because of the APIs for P2C retrievals and file submissions, the actual work required each pay period should be less than it is at present. So I know you all know this anyway, but in a typical pay period, the sequence of events usually involves, okay, first of all, you enter the details of new employees into the payroll, then you enter the pay and the hours and deductions. Next, you retrieve the latest P2C information, and this will be handled by the API and should just be a 1 or 2 click process. Next, you process and finalize the payroll. Then you submit the file to revenue, the mini P35 essentially, and again, a 1 or 2 click process will be involved here. And finally, distribute the pay slips and pay the employees. We are hoping that the responses to the API requests generated by the software will be answered in seconds by revenue systems. And this is something we feel is important to the user experience. In the UK, where they have a similar system, the response is usually answered within 10 seconds. It should also be noted that the APIs will use the employer's or the agent's digital certificate, and this cert will need to have been installed on the computer. So if the user can log into ROS on the computer, then it has the cert installed. The file specifications for the P2C request, which we now call the RPN, and the payroll submission request, being the periodic data submission, were both published on the 30th of June 2017. And this is after a period of consultation with the payroll software developers through our representative body, the PSDA, and other stakeholders, for example, Chartered Accountants Ireland and the Irish Tax Institute and so on. The next revenue deadline is for the revision of a test environment, which Revenue plan to have in place by the end of March 2018. So this will allow software developers to test file submissions and responses in real time. It's also a good opportunity for Revenue to test their own systems. As developers, we have to ensure that programming for the APIs and the various file creation routines are finished before the next budget, which will be later on this year in October. So after that, we will concentrate on programming for and testing the budget changes. So the release date for the 2019 software should be early to mid December 2018. The 2018 P35s will still need to be submitted by mid-February 2019. Effectively, this means that the old and new systems overlap at the start of 2019. And this is something you might want to consider when planning staff holidays. January and February 2019 could be extremely busy for you, and this is on top of the December accounts year ends that you're already doing as well. Okay, so now we're going to give you a quick 5-minute demo of the RTI, which is the real-time information features in our UK software, which shows you how it works there, and it'll give you a flavour of how things should work in Ireland from the 1st of January next. Our software in the UK is called BrightPay. In Ireland, we have 2 payroll software products, Thesaurus Payroll Manager and BrightPay, and both of our Irish payroll products will handle PAYE Modernisation. In the demonstration, we will look at retrieving coding notices, which mirrors the RPN retrieval, finalising the payroll and submitting what's called an FPS and getting a response, and this will mirror the PSR submission. Okay, so I think I'm just going to hand you over to Vicky here now, who's waiting beside me. Okay.
Thanks very much, Paul. Good morning, everybody. So I just have a few demo slides just to show you now, and as Paul said, it's just to give you, I suppose, a general idea how the process is likely to work when it comes into place in Ireland in 2019. So it's just to give you a general idea. So real-time reporting has been in the UK since 2013, and each pay period, I suppose what my first task is with regard to the UK system is to first check to see if there's been any changes in my employees' tax information, for example, their tax codes, their tax basis, etc., be it from week 1 to cumulative basis. Also to check if there's any previous employment history to bring in as well. So here I am, just here. This is my BrightPay UK software here on the screen. And I'm in my payroll utility in the week I'm about to process. So my first task is to just check for these changes. So I'm going to click on coding notices here on my menu bar and check for notices. And this links to the HMRC website in the UK and retrieves those changes for me. If there are any changes, I can see them clearly displayed on screen here. So I have an employee here who has a change in the tax code. And all I do is select then the employer employees for whom there are changes and apply selected. Okay, we do envisage this will probably be a more seamless process in the Irish system, less of kind of having to kind of check every employee.
Yeah, it's kind of up for debate at the moment. Ideally, it would be great just to have one click, but then you don't really know what's happening in the background. So I think you probably do need to have transparency in terms of which employees were updated, because one of the points that's been made to us is sometimes the P2Cs, even at present, they are wrong, and they can put an employee in a very sort of disadvantageous situation. So we probably do need to have some sort of an accompanying screen showing what exactly is being sucked into the payroll, so to speak.
Okay. So once I've selected my employee here, I'm going to click Apply Selected to implement the change. Okay, and at any time I can come back into this particular utility, and within history here, I've got, I suppose, a track record of all the changes that I've implemented throughout the year. Okay, so when I return to my payroll screen and actually select that employee, I can now see that the tax code here up just at the top right here that I'm showing you has now changed from the previous pay period. Okay, so we envisage that the revenue payroll notification process will very much, I suppose, mirror image these steps here. Okay. So every time an employee is paid in the UK, the employer is required to submit what is known as a full payment submission, or they abbreviate it to FPS, on or before their pay date to HMRC, which is the UK Revenue Authority. This FPS is used to inform the HMRC about payments made to every employee and all their associated deductions. And it's also used to report new starters and leavers as well. So the payroll submission request that Paul has spoken about this morning will very much be the equivalent of this full payment submission in the UK system. So the way you would prepare and submit this FPS in the UK system is, first of all, just to process your payroll as you normally would, going through each employee, making your necessary changes to pay items. Then to finalise the pay slips, I'm going to click on finalise pay slips here. Okay, you can see here as well that one of my employees is leaving. I've a leave date entered for them. Okay, and I'm going to click on OK here. As soon as the pay period is finalised, the software is automatically creating the submission that is required to go off to HMRC. And you'll see here now that I'm alerted to the fact that this submission is outstanding. So you can see the number 1 next to RTI here, which is the real-time utility. So I'm going to click into this utility here. You'll see that my full payment submission has automatically been generated for me. I'm going to select it. And the contents of that submission are displayed in a readable format for me on screen, so I can do a final check through to make sure I'm happy. This is my employee here, Benedict Taylor. You can see that his leave date is on that submission as well, so I'm going to report him as a leaver as well when I submit this. And once I'm happy, all I need to do is click on Send Now. And it literally is a very quick process, a few seconds there to be sent off to the HMRC and to be accepted by them there. Okay, and that submission has now gone through. Okay, just returning to my payroll utility then, I suppose my final task for that pay period then would obviously be to issue the pay slips to the employees. And that process I've just shown you, checking for coding notices, doing your payroll, submitting your submission, and then issuing pay slips will be, what I repeat every pay period. Paul is going to talk next about making corrections. With regard to making corrections in the UK system, just to show you how seamless it is, if after you've made your submission, you then need to make a correction, in the BrightPay software here, all you would need to do is click on Reopen Payslips here on the menu bar. Select the employee for whom you wish to make a change. Okay, make that change. I'm just going to say that the pay was wrong and I'm going to increase that here. Okay, and I refinalize the pay slip again. Okay. What the UK system then allows you to do is to send, I suppose, a correction submission to them just to report that you've made an amendment. That's done by going back into the RTI section, clicking on New, and an additional full payment submission, is that's what the correction submission is known as, and I simply select the employee, click on OK, and submit that then to HMRC to report that correction to them. Okay, so that will just give you a general idea of kind of the real-time reporting process in the UK. I'm now just going to pass you back to Paul, just to talk about corrections in Ireland.
Okay, thanks for that, Vicky. Just when I was looking at the demonstration there, one of the two things that struck me was, first of all, one of the things that might be important to note is that in the UK, the FPS is more interested with cumulative figures, whereas in Ireland, the system will be looking at periodic figures. So it is an important difference. It's something you probably don't need to be too concerned about, but it just makes the software side of it, it's not so much of a copy and paste from the UK as we would have hoped, but it is an important distinction because it means that when we look at the corrections side of it later on, it kind of colours the way you kind of need to go back to whatever period might have been wrong and do the correction in that period, rather than as against in the UK where you're actually just making sure that the most recent FPS contains the correct cumulative information. One of the other things as well is in the UK they have autumn enrolment, and every employer now has autumn enrolment, is staged more or less for autumn enrolment, so they would have pension deductions and files being submitted to various pension companies, etc. So that's one of the things we didn't show in that particular employer, but that's something that's coming down the track in Ireland. And I think when I last talked to somebody in high up, they were hoping that auto enrollment would be in for 2020. Now I think that's probably a bit adventurous or aspirational. It more than likely be 2021 or 2022, but it's something just to bear in mind that it's another integral part of the payroll that's coming down the tracks. Batching is another thing we allow for on our UK software, where you might sort of finalise all your clients in a particular month or whatever, and you might then send in all the actual FPSs at the one time. I think that there's a requirement for that. Okay, so just looking at the question of corrections and deadlines. So, as Vicky said, in the UK, the FPS must be submitted on or before the actual payday, and in Ireland, and as confirmed by the most recent Finance Act, it will be the same on or before the payday. In my view, it'll probably be easier just to submit the actual file after finalising each payroll in much the same way as Vicky showed you on that UK demo. At least you will know that the payroll is done and dusted when you close out of it. I myself, I run a couple of UK payrolls for here, and I've gotten into the habit of sending the FPS straight after I finalise the payroll each period, and it's never caused any issues. Okay, so what I do remember from my time in practice is that clients don't always give you the correct information, and they don't always give it to you on time. So this was something that you could work with before as you had time to get everything in order before the actual P35 deadline. Under the new system, I think these clients will be trouble, and you really need to retrain these clients starting now. It will take at least that long to get them to change their mindset. If a submission is incorrect, a correction submission can be made by the software. If the correction means that more tax is payable for a previous tax month, revenue may apply interest. Also, a correction after the month's close-off or sign-off date, say after the 23rd of the following month, this will be seen as a change to a statutory declaration. So if there is a constant pattern of corrections for particular clients, or if there is a pattern of late submissions for particular clients, I think they will more than likely come onto revenue's radar, and revenue may take appropriate intervention, such as maybe site visits or audits. Corrections themselves are dealt with on using the sort of the principle of follow the money. So if an employee is over or underpaid in a period and their pay is adjusted in the next period to correct this, no actual correction submission is required in this case because the payroll is reflecting what was actually paid. If an employee is paid an amount different to what it says in the payroll, then a correction submission will subsequently be required. Towards the end of this year, well, probably from June, July onwards, payroll software will prepare a return, much like an employee register or a P35, say, without the figures. This is for submitting electronically on ROS. And this will enable revenue to have as accurate information as possible for when the new system starts in 2019. So the ROS screens will start to seek this submission for all employers, as I say, from June or July onwards. Another thing to note here is disputed liabilities. This is one of the main shortcomings in the UK system, in that there's a difficulty in reconciling taxes owed where HMRC's figures are different to what the payroll says is outstanding. So these differences are usually due to HMRC duplicating employments where they receive more than one employment ID for the same employee. This can happen quite easily when employees are moved from one system to another. Unfortunately, with the UK system, there is no facility to query or drill down into their figures. I know it's something they're looking at trying to introduce now. One of the features of the new Irish system will be an API whereby the payroll can query data submitted so that the payroll can then perform a reconciliation between this data and what it has on file. So this API will be particularly useful where employers change their payroll software maybe mid-year or move from a manual system. Another thing just to look at here is Apparently there's something like 60,000 employers who still calculate their payroll manually. Now I think what this probably is that they download maybe a trial or a demo version of software at the beginning of the year, they put in the figures and they see how much the deductions are, and then they just apply those deductions for the remainder of the year. Onto the new system, they'll still be able to do this. However, in each pay period, be it weekly or monthly, they will need to log into ROS and enter all of the required details for all of their employees, and it's a bit like manually completing a P35 each pay period. And this facility in ROS will only be available for employers with 5 or less employees. Also, before processing the payroll in any week, they will need to religiously log into ROS to get details of tax credits and cut-off points, like the RPN. And this again will be a very manual process and prone to error. So for these employers, it should become apparent that they should either be using the services of a payroll bureau, such as yourselves, or that they should be using payroll software. According to this, there's some potential for new business for both yourselves and ourselves from this new system. Just looking at what could catch the disorganized client or employer out, and really this comes down to the information that has been submitted is visible and transparent to a lot more people than it is at present. For example, employees logging into their My Account will expect to see their most recent payments and what these details, and they'll expect to see that the details are correct as well. Also, if periodic submissions are late or sent in late, this will potentially give rise to interest and or penalties. Plus, the employer will probably come onto revenue's radar. A constant pattern of correction submissions will potentially give rise to interest and or penalties. Plus, the employer again will probably come to the attention of revenue. Because the actual reference number of the latest RPN is included in the periodic submission, revenue will automatically know when RPN checking and processing is not happening. So because of the need to get things right in a much more timely manner than before, it is important that you set out in your letter of engagement who is responsible for what. If corrections constantly occur because your client keeps giving you the wrong information or keeps providing the information late, the client needs to be aware that any interest that revenue charges or that any additional fees that you need to charge will be their responsibility. Therefore, you need to set out in your letter of engagement what exactly are your services and the deadlines by which time you must be provided with the payroll information, what your fees are for this service. Again, what happens when information is incorrect or not provided in time for the deadlines, and how you calculate your additional fees for when this happens. Also, it needs to be made clear how the accuracy and timeliness of the payroll is ultimately the responsibility of the client, and that your role is to calculate, process and submit returns using the information provided by the client. The majority of clients should find that the new system causes no extra burdens either on them or you. It's the messy client who will be most affected, and it's this very client who will need to change their mindset. We will be working on draft suggested text for the letter of engagement to cover PAYE Modernisation. We will also be doing one for GDPR. So in the follow-up email you receive after the webinar ends, just make sure you tick the box where it says you want to receive further communications from us. We'll also be hoping to do up some sort of draft or proposed communication that you might send to your payroll clients explaining the new system to them and explaining why everything will now need to be done on time and by the book. Earlier we covered the employer's typical payroll process. And you'll no doubt have your own processes which should be broadly similar. In addition, you also manage your client communications around payroll. If you're anything like I was in practice, these communications may be somewhat informal. Perhaps you wait until the client sends stuff to you before doing anything. This may be a bit more formal if the payroll is live with employees actually waiting to be paid. Then again, you may be really well organized, but if not, from 2019, we strongly recommend that you put a formal system in place that, say, records and timestamps your request to the client for payroll details, hours, new employee details and such like, and that also records and timestamps the client's reply. In addition, you should seek the client's official approval before the payroll is finalised and have a system to log and timestamp this approval. At Thesaurus, we're already working on ways of helping you with automating this process in as much as possible, and we will keep you updated throughout the year on our progress. Alternatively, you might even just make sure you have some sort of spreadsheet that records all this information for you. Okay, so just a quick recap. We've already covered a few bits and pieces on this in the webinar so far. So this is just a summary of the main points. Firstly, the elimination of the P forms and the end of year returns. So this hopefully will reduce your workload somewhat. There will be time savings due to the integration with the payroll software. And the final point is, look, with the problematic clients, I think you really need to start retraining these now, because if you wait until December or January next, it'll be far too late. Other things that you need to do next: check that your payroll will be able to handle the change and that you won't be charged for the new functionality. And I suppose I can state here and now that we won't be charging any extra for PAYE Modernisation. The next point is start educating your clients. The next, review your levels of engagement. And finally, I suppose, review your fees around this as well. Okay, so just pass it back to Vicky here, and thank you very much for listening so far.
Thanks very much, Paul. So we're now going to be passing over to Sinead for her part of the webinar today. Just while we're getting her slides ready, we're just going to do a very cheeky, quick sales pitch with you while we have your undivided attention. So in this morning's webinar, you would have seen that we use BrightPay, our UK payroll software, just to give you an insight into how PAYE Modernisation, or as it's known in the UK, real-time reporting works. As Paul mentioned earlier, both Thesaurus and Payroll Manager, both Thesaurus Payroll Manager and BrightPay Ireland will also be able to seamlessly handle PAYE Modernisation. So having done it already in the UK, we do have the experience and expertise. If the BrightPay software is of interest to you, then the Bureau version of BrightPay handles an unlimited number of employers, and within those employers you are allowed unlimited numbers of employees, and it is priced at just €299 plus VAT per tax year. And just to emphasise, there will be no additional charges for implementing PAYE Modernisation next year. With regard to BrightPay, it has many useful bureau features to help with the administration of your payroll clients. For example, you can roll back individual employees and you can create custom reports. And there's also payroll export journals available for integration with Xero, Sage and QuickBooks. Plus, we have an optional online backup called BrightPay Connect, and this includes an employee self-service portal to be able to, for the employees to access payslips and request leave, and also an employer portal to access client reports. BrightPay can also import previous payroll data from the likes of Sage, CallSoft and the Big Red Book. So you can hit the ground running in 2018 knowing that you are using the right payroll software well in time for the introduction of PAYE Modernisation. Okay. So just as we're switching over to Sinead, I'm just going to play a 2-minute video just to show you how our latest cloud add-on BrightPay Connect works. So just bear with us there.
Welcome to BrightPay Connect, our latest cloud add-on that works alongside BrightPay Payroll. With BrightPay Connect, you can automatically store payroll information in the cloud and enable online access anywhere, anytime for you, your clients and their employees. You'll be up and running in seconds. Secure online backup. Automatically synchronize and backup data to the cloud, protecting against ransomware and cyber attacks. Bureau Client Dashboard. Get online access to clients' payroll information. Invite clients to their own online dashboard, which can be branded with your bureau's logo. Clients can access payslips, payroll reports, annual leave requests, amounts due to revenue, and employee documents. Employee self-service portal. Invite employees to their own online portal. Employees can view and download payslips, P60s and P45s. Easily submit holiday requests. view leave taken and leave remaining. HR and annual leave management. View all upcoming leave in the BrightPay Connect company-wide calendar. Authorise leave requests with changes automatically flowing back to the payroll. Upload HR documents, including employee contracts and handbooks. Book a demo today to see how BrightPay Connect can enhance your payroll service offering.
Okay, good morning everybody, and as Paul said there, my name is Sinead Sweeney and I'm the Change Manager for the Revenue Commissioners for the PAYE Modernisation project. I suppose really what we want to do today is to give you an overview from the revenue perspective of, I suppose, the reasons why we're changing the system, and then also how the system changes are going to affect you in how you operate your payroll bureaus. I suppose some of it is a little bit of overlap in terms of what Paul has already mentioned, but I suppose we're coming at it from the revenue perspective. I suppose the real reasons why we're changing the system is because the existing system has been with us since the 1960s and very little has changed in terms of how we administer and collect the tax. While all around us everything else has changed dramatically, so the nature of employment has certainly changed since the 1960s. Where most people had one job for life, you now have people working in several employments at the one time, or also working under several contracts of employment for the same employer. And that information needs to be captured accurately on the revenue system to ensure that the person is only paying the correct amount of tax. Payroll has changed dramatically since the 1960s, and most employers are now using sophisticated payroll systems to assist them, and I suppose ICT and the technological advancements have assisted with this process. And really, I suppose we're trying to meet people's expectations in terms of, for the majority of us, we carry out a lot of our business in an e-enabled environment, and we want our employees and employers to be able to view their revenue transactions and information in an online format. So all of that has resulted in, I suppose, several of the reasons why we're changing the system. In terms of the benefits, and we would see three main beneficiaries: the employer, the employee, and ourselves in revenue. And for the employer, we absolutely want the payroll to seamlessly integrate with the revenue information systems. We want to minimise the cost for the employer to comply with these systems. And we know at the moment they have an extensive administrative burden in terms of all of the form filling and requirements that they have to carry out in terms of returning the information to revenue. So to that end, we're getting rid of the P30s, P45s, P46s, P60s and the end of year P35 return. Ultimately, this will mean that the right tax will be paid, but we're not changing the payment dates. So the payment date remains the same, but now you will return the information in a real-time manner to revenue. And ultimately, this will result in time savings for the employer. For the employee then, we want them to be able to have access to simplified online services. We want to ensure that they're maximising the use of their entitlements. And to this end, and to ensure that people are only paying the tax that they're due to pay, at the end of 2019 and into 2020, we're going to carry out an automatic end-of-year review for every employee. And this will ensure that their entitlements are correct. It will also give them real-time accurate data and a level of transparency that heretofore they haven't had. So literally, as they have been paid, they will be able to go onto the revenue system and see the amount of PAYE and PRSI that has been deducted on their behalf. For ourselves in revenue then, we're going to have a statutory in-year employer return, which will be a monthly return. This will make compliance easier from our perspective. We will now have accurate, up-to-date income details as it happens, instead of waiting for a year later when we normally get in the details from the P35. And over time, it should reduce customer contacts as both employers and employees become familiar with the online facilities that will be available to them. And it will also allow us to carry out timely, targeted interventions. For most companies that end up in difficulties, and are unable to pay their revenue bill, it's usually the payroll that suffers first, and maybe it's where they actually stop paying their employees altogether, or they actually start paying their employees cash. We will now have visibility and sight of all of this, and we'll be able to intervene at a much earlier point in time to ensure that the problem doesn't continue to grow and then become something that's very much insurmountable. Just to give you an idea of what we're currently dealing with, we do have 2.7 million active employments registered with us currently, and that includes people who are in receipt of a pension. We have 206,000 employees that are currently registered as having more than one live employment, and we certainly have multiple employments with the same employer registered with us as well. And I suppose examples of that would be some of the government departments like the Department of Education or the HSE, where people are working in several roles but under different contracts, all with the same employer. We currently have, and these are figures that are coming from the 2016 P35s, 208,000 employers registered with us. 110,000 of those employers have less than 5 employees. And that's something that we're very cognizant of in terms of our design and how the system is going to work for those employers. 98% of those have filed through ROS. And I suppose just to give you an idea of the administrative burden, over 5.4 million forms were generated both between ourselves and the employers, all requiring processing. So we're removing that administrative burden from the employer. I suppose just in terms of your current employer obligations, and for those of you that are operating on behalf of employers, every time an employer pays an employee, they must apply the latest P2C information. Even if that P2C says that there are no tax credits available for this individual, that is what must be applied. And then if there is an issue with that, the individual themselves should contact Revenue and have the situation rectified. They must calculate the tax to be deducted, and then they must provide the employee with a payslip that shows the pay and the deductions that have been made. In terms of revenue reporting obligations then, the employer must report on the P45 or P46 process every employee that starts or leaves their employment. Every month or quarter they must submit a P30 with the relevant payment, and by February of the following year they must complete a P35 with the associated listings for each of their employees. So that process will continue up until 1/1/19. As Paul already mentioned, there will be an overlap period for the P35s for 2018, but going forward then the new process will be in place from 1/1/19. In terms of how we see the system interacting with Revenue in terms of the seamless integration, the employer will have their list of employees to be paid. The revenue payroll notifications will feed into that system, and the employer will be able to perform their calculations, run their payroll, send their file for processing as they currently do to the bank, create their pay slips, and at the same time send a report of those transactions to Revenue. The employee really isn't going to see anything different. They'll still be paid, they'll receive their payslip, but now they'll be able to go on to the Jobs and Pensions module of revenue.ie and actually physically view what has been paid and deducted on their behalf. In terms of the actual P30 then and how we're going to actually process. So if you take, for instance, somebody who's a weekly payer, they will send us in the details of their weekly payroll as it happens. At the end of every month then we will summarise those submissions and send them out basically a bill which will outline their total liability for that period. They'll then have a period of time in which to make a correction should they so need to, and that means where they will correct the underlying data that they've sent in to us. And then the payments must be made in line with the current payment dates. So there's no change there to when the payment needs to be made. This will allow us to debt manage much sooner for any underpayments in year, and then obviously all of our in-year interventions will be based on risk analysis of what has actually been reported to Revenue. In terms of the P45 and P46 process,
So where an employer has a new employee that's joining their company, they will insert a commencement date on their payroll for that individual. This will then allow them to access the latest revenue payroll notification and to run and perform their payroll as they would normally. So there's no waiting around for the individual either to present them with their P45, or in circumstances maybe where the employee has left without a P45, they're now able to tax them correctly. When somebody is then leaving the employment, the employer will insert a cessation date on the payroll, and when that's transferred into revenue, then that will tell us that the person has ceased in that employment. The individual can also go on and set up their own employment record via the Jobs and Pensions Service if they so need to. In terms of the P60 then, we are abolishing the P60, and going forward there's no obligation on the employer to provide a P60. So the individual employee can now go on to their own My Account and look up what will be known as an end of year statement, and this will show them the pay and tax that has been deducted for that period. And they can actually look at this statement at any point in time, and it will currently reflect what has actually been paid over. For those institutions and bodies that require a P60, we will be engaging with those to let them know that there's a change in how the P60 is going to look and be presented from employees. So the likes of banks, lending institutions, the HSE, SUSI grants, or any other organisation that requires P60s, we will be engaging with them to let them know about the change. In terms of the end of year process, which currently is the P35 and which we know employers use to try and tidy up and to catch things maybe that they haven't been able to capture during the year. This process is now gone, and this is a big mindset change for employers. So now there isn't an actual end of year return. Every single month is the same as the previous month, and it's a statutory return. Albeit the December statement will be available in early January to allow people to finalise their accounts, etc. Again, there's an opportunity to correct, and this will be the same every month. And again, there will be an opportunity for revenue to debt manage for any underpayments. So it's now month-on-month reporting, and the end of year process is actually gone. Just to give you an idea of what's currently involved and how that's going to change with the new system. So if you were to follow the yellow boxes there, so you're running your payroll, you log into payroll, you set up a new employee, you export their P45, then you log into ROS, you upload the P45. You have to wait until the next day when you get an email to tell you that that process has been completed. You then log into ROS and download the P2C. Then you log back into your payroll, you upload the P2C and run the payroll. So there's a significant amount of processing involved. Quarterly then you have to log into payroll, download the P30, log into ROS, upload the P30, pay the P30. Again, wait until the next day for an email, log into ROS and get your receipt. Then yearly you have to log into the payroll, download the P35, publish your P60s, log into ROS and upload your P35. So there's a lot of toing and froing there with the systems. So what we're aiming to achieve is that when you go to run your payroll, you'll simply log into your payroll, you'll set up your new employee and run your payroll. Monthly then, which is optional, you can log into your email, log into ROS and accept the statement that we have issued to you. And then you can quarterly log into ROS, make a payment. Next day delivery, you'll get your email, log into ROS and then you'll get a receipt. There are other options in terms of direct debit and variable direct debits, which I'll go into in a couple of moments. In order to do all of this then, we've obviously had to amend the existing legislation to ensure that we are fully covered for everything that we're going to do going forward. So this legislation was enacted on Christmas Day and it's now in place. So the tax deduction card that we currently know as the P2C will now be replaced from 1/1/19 with the revenue payroll notification. We've also stitched in the time frame for when an employer must notify revenue that they have actually paid somebody. So it's now on or before making the payment, they must notify revenue the amount of those emoluments, the date of payment, and the amount of income tax deductible or repayable. Then the monthly statement will be issued to employers, which will show the total income tax, USC, PRSI and LPT to be deducted or repaid by that employer. The monthly return due date is still the 14th of the following month, and the statement will be deemed as the return if the employer does nothing. So we've issued you the statement, you're happy with it, you don't have to actually do anything, we will make that your return. However, if you do need to correct something on the statement, you have an opportunity at that point to correct the underlying payroll data. The tax must be paid by the 14th of the following month or the 23rd where you're paying and filing online, and the Collector General does have the power to vary those payment dates to account for quarterly and annual filers and remitters. There are standard rules which will apply for those who currently have e-filing exemptions, and they will remain in place. We've also built in a provision to ensure that where there are specific situations, maybe when somebody cannot comply with the legislation and actually return their information to us, maybe because of persistent technology or internet or electricity failures, that there won't be any penalties. It's not just simply, oh, I can't find my login today, I'm not able to run the payroll. It has to be a persistent technology or electricity failure. So something like the storm Ophelia, where maybe people were without power for several days. A direct debit facility will continue to be available, and that's always been subject to revenue approval and will continue to be so. And we've also built in the option for a variable direct debit, and that has really come from a lot of the workshops that we've carried out to date, where employers have suggested that they would like to pay just what's due at that period of time. So we've built that into the system as well. We've also changed the current facility to raise a revenue estimate, where maybe somebody has been through a revenue audit and there is a dispute in terms of what their liability is. We'll now actually be able to raise an assessment for an income tax month or a period of consecutive months. So currently it's usually an estimate for a year or 2 years or maybe even up to 4 years, but now we can actually look at it for a period of months. We've also built in revised provisions for emergency tax, and really the only time somebody should be on emergency tax is where you don't have a PPSN for that person. We will allow the submission to come into us for a period of time, because we do understand it can take time for PPSNs to be assigned, particularly for overseas employees where visas and work permits are required. So they will be on emergency tax until the PPSN is actually assigned to them. The basis of assessment then for actually assessing Schedule E is changing from an earnings basis to a receipts basis with effect from the 1st of January 2018, but proprietary directors and all DEASP payments will remain on an earned basis. We've also built in a facility there to gross up payments that are identified as having been paid without tax to employees. There are exclusions to this for vouchers that have been paid under Section 112B and also for the end of year settlement agreements under Section 985B of the legislation. In terms of external stakeholder engagement, I suppose we have been engaging with both employers and representative bodies since the end of 2016, and it was clear to us from the public consultation submissions that employers do focus on an end-of-year reporting process, and that really, I suppose, is something that needs to be looked at right now by yourselves, and you need to advise your own clients that this process is no longer going to be feasible. The real-time reporting regime will make this process very visible both to revenue and also to the person's employees, and as such their business processes need to change. As I've already mentioned, we have built in a facility to allow for corrections, because we do understand that payroll can be difficult to manage and there are times when corrections are necessary. But it is important to make sure that every time your submission comes in that you've done your best to ensure that the details are accurate and that it's on time. It's vitally important that the employees are able to reconcile their payslips with the data that has been submitted to revenue on their behalf. And it's also important to bear in mind that everything that is submitted will feed into the revenue risk analysis systems. So if we're constantly seeing corrections from a particular employer, that will trigger some type of revenue intervention to actually ascertain why this is constantly being corrected. So in terms of employer readiness, we have been contacting all employers based on analysis of our 2016 P35 returns. And this was really to highlight the fact that a lot of employers didn't actually inform revenue of employees that were working for them. So to date, 32,000 letters have already issued, and if you have received one of these letters, we'd ask you to act on it and follow the instructions in the letter. If you want to check whether or not you've actually received one of these letters, it'll be in your Ross inbox under the category of PAYE EMP P35L review. And for those people who ignore that letter, there will be follow-up revenue interventions to make sure that the processes are fully completed. Hand in hand with that data alignment project, we're going to request all employers to submit a list of their employees at some point in 2018, probably mid-2018. And really, I suppose the objective of this is to make sure that the people that you have currently registered for you are one and the same as the people that we have currently registered for you. And to make sure that for 1119 that you will be in a position to receive the correct RPNs for all of your employees. So I suppose the timeline is tight. You now have 10 months, 11 months to actually get yourself ready and be ready for 1119. We understand it's not just a software challenge, and there are business processes that need to change both from our own perspective and also from the employers and payroll operators' perspectives. Readiness is challenging, and we are monitoring readiness throughout the whole design process of this project. And we do hold an external stakeholder steering meeting once a month to try and assess how both employers and representative bodies are preparing for the changes. Just to give you a flavour of some of the engagement that we've been carrying out to date, and this is just a snapshot in time from September to December. We've had extensive meetings with a lot of the large representative bodies, the large tax practitioners and accountants, the Payroll Software Developers Association. We've engaged extensively with them in a co-design approach to the project. And I suppose during November and December we had a co-rollout with IPAS, where we attended a lot of their budget briefing sessions. I think 27 sessions were attended by ourselves, where we met up to about 1,000 different employers and payroll operators to ensure that they were in a position to be ready for go live for 1119. I suppose I have a brief snapshot of what we've been working on in January, and even since I've put these slides together, further engagement has actually been agreed and booked in for 2018. So as you can see, we have been extensively engaging with both employers and representative bodies. As well as all of that, we will have a targeted media campaign commencing, and we will be writing to all employers, as we've done with the consultation process, through their Ross inbox, and also engaging directly with them where any of our revenue staff members are currently out there engaging with employers. They'll also be bringing the PAYE Modernisation message. So in terms of preparing for PAYE Modernisation, this is a very simplistic checklist, but from our analysis to date, it's certainly an area where people seem to be going wrong. So can you please make sure that you have the right PPSN for all of the employees that you're managing, either as your own employees or as payroll operators. Please make sure that you've registered your employees with revenue and that you have an up-to-date tax credit certificate for everybody, that you complete the P45, P46 process for anybody who commences or ceases working with you, and that you have adequate controls in place to manage your BIK and your notional pay and benefits, because now, remember, this is going to be returned on a monthly basis to us. You may need to look at reviewing your BIK policies on a quarterly basis, and just to make sure that you're aware of your duties as an employer at the end of the year. In terms of our next steps, we have a significant amount of information up there at revenue.ie under employing people. We have a tab there, PAYE Modernisation. Then we will continue to hold our update meetings, and should you require to provide us with any questions or queries, we have a dedicated email support box there. So please feel free to contact us at any point in time in relation to that. So thank you very much for your attention.
Okay, many thanks, Sinead, for your time there and the information. Very informative. We're just going to get ready now for the question and answer session. So just while we get our panel set up, we're just going to pause the microphones and the webinar there, just while we switch the webcams on, etc. So we'll be back to you in about 30 seconds. Thank you. Okay, so we're now ready to start the question and answer session there.
Yeah, just to note, we do have a fair few questions in, and any questions we don't get covered in the time frame, we'll try and respond to after the webinar by email or whatever. But just to let you know, if we don't get to your question, it's not because we don't want to, we just don't have the time.
Okay, so we'll get going with the first question that's come in. If a person is paid, say, 4 weeks' wages in one payment in, say, week 4 of the year, can that payment still be treated as a payment for 4 individual weeks under the new proposed system?
Paying it in just the one particular week?
Yeah, so in week 4, so 4 weeks in week 4 rather than separating it out.
But I would feel that the actual return would be for week 4 in that case.
Yeah.
It's effectively 4 weekly payroll, isn't it?
Yeah. I suppose it might be more to do with PRSI contributions in terms of then that's 4 weeks contributions rather than one, which depending on how the payroll is set up, usually if it's a monthly payroll it will capture the 4 weeks contributions anyway. So yeah. I'm not really sure.
Would it make any difference though if we did 4 individual weeks?
Shouldn't really.
I don't, yeah. Okay.
And I suppose too,
their tax credits
yeah,
would be,
but you'd have the accumulation of the 4 weeks to date.
4 weeks, yeah.
Okay. Just a question that came in quite early, so you may have covered it already, Sinead, but at what stage are revenue going to inform employees about PAYE modernisation? Majority of employers are small and don't interact with the revenue website necessarily, so do you have any, I suppose, what the plans are?
Yeah, I suppose we have had direct engagement with all employers, and on every employer notice that has gone out since the project went live, there are information, sort of headers there in all of the notices that I've issued directly. We also directly sent an email in relation to the consultation process. So employers have been contacted directly, but we will have a more targeted campaign in terms of actual letters and information into their ROS inbox. But the website does have a significant amount of information there, and we have been engaging, as I showed there in the slide, with the majority of the representative bodies, the accountants, the tax practitioners, and the likes of IBEC, the Small Firms Association, the IFA, and a lot of the bodies that would represent the smaller employers. So we are doing our absolute best to get there and get the message out there.
I suppose the likes of this
and
webinar as well, I suppose, there's nearly 1,000 accountants on this webinar. They would each deal with maybe 50 or 60 employers. So hopefully, you guys will get the message out to these small employers as well as revenue trying to do it.
Okay. Again, a question that came in quite early, and we probably covered it then later on in the webinar, but no harm to cover it again. When will the payroll taxes have to be paid?
There's no change to the payment date, so they're remaining the same, so there isn't a change there. So again, it's the 23rd if they're filing online of the following month, or the 14th.
Okay, thanks, Sinead. With PAYE Modernisation, does this mean you must have payroll software even if you have only one staff member on a set salary?
Well, I think revenue are going to have facility for the one amount we put in at the beginning of the year, and for that maybe to be continued throughout the year.
Yeah, we're looking at options for people who don't have payroll software, and we will provide a template where the person has obviously calculated what the employee is due, and they'll be able to put that on to Ross in terms of the actual amounts that they've calculated. We're also looking at maybe an option whereby if they do decide to have payroll software, that there'll be an option to upload it at the beginning of the year where they know the salary is going to be static for the entire year, and then obviously if something changes they can go in and correct it. But at the moment there will be options for people who don't have payroll software.
I guess I suppose if the amount of wages or salary is changing each week or each month, it would be preferable, I think, to have payroll software or to use a payroll bureau in those circumstances.
Yeah.
Okay, thank you very much. A question I'm seeing coming in a few times there. What happens if there are weekly and monthly payrolls for the same company? Is it separate files?
Yes, yes it is. Yeah.
Okay. How will new employee details be provided?
So I suppose I touched on that in terms of when somebody new is starting with you. It's a far more simple process now. You'll simply go onto your payroll and insert a commencement date, and that will actually signal to revenue that this is a new employment that needs to be set up, or the employee themselves can go on and set it up on jobs and pensions.
Okay, thanks Sinead. Just with regard to corrections, so the example given is if it is week 40 on the payroll and an error to week 20 is discovered now, if week 20 is then corrected, will week 41 indicate the cumulative effect of the week 20 correction?
Well, it would do that in the software anyway, but I suppose it's also important to note that the actual payroll submission request, the periodic return, doesn't actually have cumulatives on it.
No.
So it's just the periodic figure that will be on that. But the payroll itself will actually have the correct cumulative, in that case, from a correction in week 20.
They'd have to send a correction submission for week 20.
Yeah, it was a case that the employee was paid something different to what was submitted to revenue in that particular period.
Okay. How do you deal with supplementary salaries provided for company directors? How will that be handled?
Well, it should be returned as it's paid, but there are, filing sort of set filing periods for company directors where, maybe items haven't been voted until they have their own AGM, etc. So there are specific rules for directors, and they'll still remain in force. So we're not changing that.
But we still need to put in a PSR for the amounts.
Yeah, there should be.
And would that be like dated 31st December?
There should be. Again, it should be when they're paid, but
Yeah.
again, we're tying down the specifics of the actual director filing and how that's actually going to work.
Okay, so it's
More than
not,
likely it will be the date that it's actually paid.
The
So
date
even
that it's
though it might
actually
be
paid.
declared for the 31st of December, if it's not
Exactly.
paid till the 31st of March, you declare it on the
Exactly.
31st of March run.
Okay. Will there be a requirement for employees to set up a My account, or can they continue to contact revenue via the PAYE line? Many employees are of a generation who are not skilled in using the internet or have no access.
never mind the generation. I presume they're probably saying about older generation. I have kids that have problems with doing the whole My account thing. So it's not necessarily a generational thing.
Yeah, they will. I mean, the best option is to set up a My account, and we would be encouraging people to do that because everything will be available to them online. There will still be the 1890 employee helpline available, and the employer's helpline will also be available. And we will be looking at maybe, introducing different levels of support there as well, and redesigning how those systems currently operate.
Do you think, Sinead, if somebody doesn't have a computer, doesn't have access, whatever, if they phone up, would the statement be sent out to them at the end of the year by post?
If they already are what we would call recognised as non-E enabled, yes.
Yeah.
But where they have interacted with us through an e-format,
Okay.
the statement won't be issued to them.
Okay, just a software-related question. Can I import 2018 payroll to BrightPay 2018 from CallSoft 2018?
Yes.
Yes.
I'm not sure whether the queue does come across, or do they?
We can certainly check that out and get back.
Yeah,
Yes.
I know at the moment the facility is there for
Yeah.
2017, taking that file in so you could sort of rerun January if you wanted. I'm not 100% sure now whether 2018 whether our main bright pay programmer has actually worked on that import yet. So maybe we can get back to that one.
Certainly check that out and get back to you on that one. If there are no more P forms on commencement of a new employee and they do not have a P45 anymore, how do we obtain the tax credits? Do we put them on emergency, or is the full responsibility with the employee now?
Well, again, I guess when you're doing the payroll run, you have added that employee into the run, and the RPN requests that will go in, that will sort of shoot off automatically before the actual payroll is processed itself, will actually request the tax credit information from revenue for that new employee. So it's really, that's all there is to it. I mean,
Yes. Absolutely, and I mean, it's going to be in conjunction with the payroll system. So once you've put somebody in there as a new starter with yourselves, you'll be able to access the latest RPN for that person. So there's no need for, the employer to wait around for a P45 from the employee.
If the employee hasn't contacted revenue and updated their My Account, obviously I assume then the RPN will come back with emergency tax to be applied.
If it's a thing that the previous employment hasn't been ceased, and the person is now starting, obviously the tax credits are still going to be with the previous employment, so they get a zero cert. That's what the employer should actually apply, and then the individual needs to contact revenue.
this was not actually emergency, it is a zero cert, which
Yeah.
is effectively
Zero
the same
cert,
thing,
yeah.
I suppose, as
Yeah.
financially emergency.
Okay, hi, could you clarify if it is possible under the new system to declare a fee for directors up to 6 months after the accounting date, as is possible currently?
Yeah.
Okay, thank you.
I suppose there'll probably be guidance maybe issued.
There will be
Issue.
guidance. There will be
Issue.
guidance
Yeah.
for the directors, absolutely.
Any comments on how will the system work in relation to liquidations and insolvencies? Any thoughts on that?
Well, I suppose if the company is in a liquidation position or an insolvency position, and if there are staff members that are still being paid, that information needs to be returned. So I suppose if there has been a liquidator appointed, then they take on the responsibility for that as well. So then they'll need to be filing the actual submission.
Yeah, normally the liquidator or the receiver would get a tax registration number
Yeah,
in their
they
name
would,
at that
yeah.
stage anyway, so
Yeah.
they're just operating a payroll.
So
on that
the
basis.
liquidator is actually the employer.
Yeah.
Okay, this is something actually I remember when we launched in the UK with the RTI, that a good few people thought about maybe switching employees from weekly to monthly payroll to reduce workload.
Yeah.
Any comments on that?
I don't think if everything's been done sort of in a timely fashion, I suppose, and in the correct manner, there's really no additional workload involved.
There'll be less work really, I suppose. It's new and it's daunting, but in the long run it's going to be less run because you don't have the P forms, there's no registering a new employee. It's all done through the RPN and the periodic submissions.
The employees themselves might have an
Yeah.
issue with being changed from weekly to monthly because
So again, it would come down to, what can be agreed with the employees in that case, because obviously if somebody's currently being paid weekly to then change over to monthly, there is a cash flow issue associated with that. I suppose maybe possibly where the question is coming from as well is that if you're an accountancy practice or a payroll bureau and you're operating payroll for so many clients, it's the number of times that you're lifting up the file each week versus each month. Especially, I suppose traditionally you might only be getting the bookkeeping in every 2 months and you're processing 6 or 8 weeks of payroll at one time as opposed to each week, which is obviously what's going to have to happen if the details have to be submitted every time an actual payment is made on or before the payment date.
I guess in that case, it's okay. You just need to make sure you're covered in your fees, I suppose, really.
Well, that's it, yeah. You probably could possibly end up needing additional resources if you're processing weekly.
Okay.
Many thanks. So how do revenue plan to deal with company BIK? For example, take cars, for example, so where actual mileage will not be known until the end of the month, for example, after a payroll has been run. Also, even where companies monitor and check mileage maybe quarterly or annually in quarter 4, this will likely lead to corrections for prior months. Will this possibly lead to revenue intervention because there's regular corrections going in?
No, I suppose we would be encouraging the companies to do a quarterly review, because at the moment most companies leave it until October to actually look at October, November, and then trying to actually reconcile the figures right back for the whole year can be difficult. So if they're doing quarterly reviews and they're amending the BIK in the next period, that's fine, because it will all be caught up anyway, and we'll know that it's to do with the BIK and cars, so it's not necessarily going to trigger an additional intervention.
And would it be handled actually then by way of correction, or would it not just be automatically just updating in particular, say you check the mileage week 26, the end of June, in week 27 you're just updating that the average
BIK.
mileage is now
Yeah.
working out at X instead of Y.
Yeah, we're looking at the BIK area in itself in terms of maybe streamlining the whole process anyway, so that may have come on board by the time the system is going to go live. But yeah, it would be either by way of a correction or by rectifying it, and when they actually go in and allow whatever it is being charged at that period of time. But a lot of companies leave it until the end of the year, so then there is a significant amount to actually be corrected, or that should have been happening on a monthly basis.
The correction in that case would really just happen in that particular month.
In that period, yeah.
So there'd be no official correction submission being made in relation to that.
It would be in the following period that the BIK rate would change. Yeah.
Okay, thank you. How soon do you think we would have the template out to us regarding the letter of engagement for payroll? I think this will be very useful in bringing awareness to employers.
Yeah, I'm going to work away with Sandra on that one.
No pressure.
Thank you very much.
Sandra's doing it,
Well, Sandra's certainly going to help me on that. But yeah, no, we will. I know it's something that...
And I think it's something that's extremely important, and I know myself too, like some practices may not even necessarily have a letter of engagement currently for operating payroll, especially for the smaller employers that are out there, where there might only be one or two employees. But I think certainly it definitely makes sense now is the time, and it's a good excuse if you haven't already got letters of engagement in operation for payroll to introduce them, because there are going to be those clients that are going to be hard to retrain. And I know even obviously, like most firms at the moment, you're going through the process of trying to get the P35s completed for 2017, and you're getting in, notification of changes, having to go back, change the wages that were already notified as being what was paid out, but it turned out that's not what was actually paid, and so on. So certainly there's extra time involved. You want to make sure that you're going to be covered for it.
Yeah, I remember from my own time in practice, the amount of times I got blamed for, the stuff going in late or whatever, when it wasn't me at all. It was just, I didn't get the information. So, that would be a lot more, important on the new system, because it could give rise to interest, it could give rise to coming onto revenue's radar. So, I think it just needs to be very clear with the client from an early stage.
Absolutely.
Okay, do you envisage any problems for employers agreeing net wages with employees as opposed to agreeing gross wage figures?
I don't really see a problem as such under the new system. I think the problem is for the employer. It could end up just costing them more, because
it's not make good commercial sense to be agreeing net to gross, because like that, and like even as an accountant myself, I often get the query saying, I'm taking on somebody, I'm going to pay them €500 net a week, how much does that work out at? And you don't necessarily know the employee's details, so then they go off, they come back, they say it's a single bloke, work it out on that basis, or it's married but his wife has her own tax credits, and then you find out halfway throughout the year maybe the wife has taken all the tax credits and all of a sudden it's costing twice as much to employ that employee. So as much as possible, employers should be agreeing a gross figure with their employees, but I have the same fight with a number of clients, so unfortunately I think it will continue no matter what, PAYE modernisation or not.
But I don't think there's no difference
in terms of the processing.
Revenue aren't going to see it anyway, they'll only see it.
The software will calculate that in the background, same as it does currently.
Just one for either Paul or Audrey. I use Thesaurus payroll at the moment. Do I require BrightPay as well, or can the PAYE modernisation be complied with using Thesaurus payroll?
Yeah, they can use either product under PAYE modernisation. Yeah, both will work. So if they're happy with Thesaurus, stay with it.
Indeed.
Okay. Will the P21 forms still be available? Obviously the P forms are going in the payroll, but the P21?
It'll be a different type of form, and the fact that we're actually going to do an end of year review for everybody as well should eliminate the need for P21 type balancing statements. So again, it's something that we're working into the design process. I mean, I can't tell you exactly what it's going to be called, etc., but the fact that we're going to do an end of year review for everybody should, try and eliminate a lot of the requests for P21s.
It'll really just be to do with medical expenses and stuff like that that are outside of
And
payroll,
we're
I
also
suppose.
looking at, I see there's another question there about medical expenses and Med2s. We're also looking at maybe trying to tidy up that process, because if we are having the information in real time, there shouldn't really be any reason why you have to wait until the end of the year to try and claim it. So again, it's something that we are looking at in terms of actually, making the processes easier and, that people can actually claim their refunds much quicker.
Yeah, so as the year goes through, they could actually, so if they got dental work done in April,
Exactly.
they could submit the Form Med2 at that stage.
Exactly.
And then,
And if we have the details that have been paid over for them, there shouldn't be any reason why. Yeah. So again, it's something that we're looking at, but again, it does depend on how the person, has set up their tax credits and whether they're jointly assessed or separately assessed, and the likelihood of them using those credits in the year, etc. So there is a little bit of work to be done there in terms of being able to assess what's actually due in terms of a medical refund.
Okay, why are revenue copying the HMRC system so much? I've used the HMRC system with another payroll provider, and I would have submitted a lot more reports each week or month than what has been discussed here. I would see the HMRC system as rather flawed and not as responsive as they hoped. Any comments?
I suppose we have designed the system differently to what the HMRC have used, and because we have a different purpose for the system as the HMRC did as well. So we've tried to learn from the pitfalls that the HMRC have experienced, which is why we took the co-design approach with the payroll software developers, and why we have extensively engaged with the larger employers and representative bodies to ensure that we don't have the problems that they had. So, we're not actually copying the system.
I think there's a lot of differences actually between the two systems.
Yeah.
So one of the big differences is the employees being able to actually
View.
see the periodic information. I know in the UK it was mainly done to do with the tax credits, universal credit.
Yeah.
Which they're equivalent of the social welfare or whatever.
I do often think if they had the time again, they might do things differently. Okay.
They should have waited till we did it.
More details regarding 53 pay days and how this will be handled.
Well, I suppose at the moment, the only thing we know is that you need to specify the number of pay periods on the PSR. But how that's going to be used by revenue at the end of the day, we don't know yet. And I don't think Sinead knows.
No, we've been reviewing the whole 53 issue, and certainly we've been engaging with the Department of Finance in relation to it as well, because it probably requires legislative amendment, and it does have implications for the Exchequer as well. So we need to look at that, and it is something that's currently being looked at by our legislative teams. So I'm really not in a position to say any more about it at the moment.
I would speculate. They probably will adjust for week 53 because there is a huge cost to it.
It's also unfair maybe to people who are paid monthly. They never get an extra credit or cut-off point, so maybe it brings everybody back in line,
Yeah, and it has to be equitable, so that is one of the reasons that we're looking at it.
Okay, just going back to supplementary salaries, if you pay a supplementary salary in, for example, March 2020, in relation to accounts for year ending 2019, will this not distort the wages per the accounts for the 31st of December 2019?
So it's the reconciliation of the P35, so the wages for the accounts will not match.
Yeah.
But
they won't match.
They won't match, and that'll have to be explained then if there was a revenue audit, etc.
it won't give rise to a revenue audit, will it?
No, it shouldn't.
I suppose in fairness,
No,
but it would
there are transactions that, do cause the accounts to be out of sync with what has actually been paid. So, once there's an explanation and, that explanation is readily available and can be supported, there's not an issue with that.
Is there a facility for putting that explanation on the CT1?
Yeah, you can put a note
There
onto the
is.
CT.
Yeah.
Okay, so
Yeah, there is an explanation, but if the payment is being made in March, that's when you're recording it on the
Exactly,
payroll.
on the payroll, yeah.
Okay. An employee who is stated as USC exempt at the start of the year, then during the year starts earning over the USC threshold, what happens in this situation?
First of all, at the outset, when somebody's taken on an employee, they do need to look at what the average earnings are going to be if the person is going to be there for the year. And if they feel they're over the USC threshold at the start of the year, they shouldn't actually give them the exemption because they know they're actually going to hit it. Now, that can be difficult because you may not know that the person is going to be with you for a year. So it will be amended mid-year, but if as a payroll operator or payroll bureau you notice that somebody is coming close to the exemptions, then you need to speak to that employee or, the company that you're managing the payroll for, and that individual needs to contact revenue. Now, we do know that employers have brought it to the attention of the employee. The employee obviously doesn't want to notify us that this is happening, but given that we are going to be doing an automatic end of year, it will be captured at that point.
So even if the European comes in saying the employee is USC exempt, but really they shouldn't be.
They shouldn't be. You should act. Absolutely.
Yeah.
Absolutely.
And if revenue, you think, see after the first month maybe that it looks as though they're definitely going to be, will it happen that quickly, do you think? Or
I'm not sure.
Yeah.
I'm not sure because again, you see, we don't know how long the person is going to be
they might be
in
there
that employment.
for 2 months.
Yeah.
And also where you might come across those types of scenarios is maybe somebody doing an internship and then go back to college, so they're only working for maybe
A
2 or
period
3
of time.
months. Yeah.
I know we've had people before where maybe they've been a student in 1 year, so they only worked for a few months of the year,
Yes.
and then they go into full-time employment. So revenue, look at last year's earnings and say, oh, they're under the threshold.
Yes.
But actually they could be well over it, know. But, yeah.
Okay, just concerns about where broadband isn't great. How is this going to be overcome when trying to access revenue? Make your submissions where your broadband is a bit hit and miss.
Yeah, I mean, we have engaged with the National Broadband Forum because we do know there is problems with broadband around the country, but unfortunately it's outside of our own control, but we have stressed the importance of rolling out broadband and, high quality fibre broadband. But if there's an issue, the person will probably have got an exemption from revenue, or if it is a persistent issue, they need to contact us now maybe and look at applying for any exemption, whereby then we will provide a paper type facility for that individual, but they have to have been categorised as e-exempt.
Would that be paper for every single pay period, a paper return?
Yeah.
Yes, okay.
I suppose just the other thing on the technical side, the actual submissions themselves there won't be a huge amount of overhead in terms of, broadband speed or whatever. The file sizes would be quite small, particularly for small employers, obviously. But, your hotspot on your phone, even if you're not even getting full 3G, I feel would probably see the file go through okay. But anyway, I suppose we'll find that out in the testing phase as well.
Okay, and we talked about corrections there a little while ago, and just a follow-up question to that. We mentioned there where maybe the error is in week 20 and you're on week 40. Will you then require, I suppose, weeks 21 to 39 to be redone and submissions for each of those weeks then to go back into them?
Because the cumulatives don't change, there should be no requirement for that. If the change, I suppose the change is relating to tax credits or something like that, or
I suppose there's probably very few circumstances where the payroll is wrong and the employee was paid that wrong amount.
Mm-hmm.
Most of the time it's like somebody who's left short money or overpaid.
yeah.
So the system is showing what they were actually paid. Do you know what I mean? And it's more a correction in a later period just to correct their year-to-date figure, really.
The correction through the payroll itself rather than correction to a previous return. I suppose at the moment we're starting to develop the system for next year, and these will be some of the queries we'll have to put to the revenue technical team. So I don't have a 100% answer on that question yet as to whether the intervening periods, if some of the tax amounts changed, would you then need to submit new figures? I don't
You'd
know.
imagine if the tax credits were wrong, that's what they're paid on.
Well, that's what they were paid. Yeah,
Yeah.
exactly. You're right. Yeah, so,
Yeah,
it wouldn't be correct
yeah.
in something that was paid differently. Whatever.
Yeah, it would be more if you declared that somebody got €100 and they actually got €110 or something like that, that you would be correct.
Yeah, you're right. Yeah, so there wouldn't
So it
be
should
any.
only be that period.
There shouldn't be any need for the intervening periods to be submitted.
Okay, will the RPN add new employees who are not already in the payroll to the payroll software automatically, similar to the current P2C file?
No, it's not the RPN, it's the employer that creates the new employment by putting the person on their payroll and inserting the commencement date.
I suppose the payroll would only request RPNs for
Where
individuals
somebody
that are
is
on the
the
payroll.
Yeah.
Yeah, and it's in the background is actually split between what they call a lookup RPN and a new RPN request, and you won't really see this, in terms of when you're looking at the software. But there's two requests that go in. First of all, for employees that the system knows that revenue already knows you have, and then for new employees that revenue don't know that you have. But the response to both of those will be equivalent to like a P2C file coming back at you, which will be automatically, imported into the software.
I suppose the question really is if an employee goes on and registers the new job through my account,
Hmm.
so revenue know they're linked to the employer, will there be a way of getting that information into the software without having to do it manually?
But why would they do it manually though?
No, so they're adding the employee to the payroll, but if revenue
Yeah.
already have them linked to that employer, will there be a way for the payroll software to put it in,
But through the RPN request.
to put in the employee?
Yeah. Or to pull in the employee. Oh, rather than adding them in.
Yeah.
Oh, sorry. No.
Yeah, no, I'll put it in things, so the
Yeah.
employees will all have to be added to the payroll.
Yeah,
Yes.
commencement date needs to be input.
Yeah.
Okay, I've just 2 or 3 questions and it's kind of around the same topic and it's back to kind of making your payments to revenue. Clients who pay monthly by direct debit at the moment by instalments, so can this still be used or must the
Yes.
exact monthly payments be made?
No,
It needs to
the
be-
direct debit can still
can
operate
still
as normal.
continue.
Yeah.
Will there be penalties so the direct debit is set up for 10,000 a month, but actually you can see by the liability that actually it's 12,000 a month?
That'll be probably part of our compliance,
Yeah.
and, if we know that there's going to be issues and that it's going to be accumulating towards the end of the year, we will intervene. Not necessarily that there'll be penalties, but that, obviously it has been, an incorrect assessment of what was actually going to be the liability. So we'll have to look at that, and again, we are, going to allow a period of time, obviously, for the system to bed in and for people to become familiar with what's required. But if it's blatantly obvious that, there's been an underpayment and that, they would have known straight away that this wasn't going to be correct, well then obviously there will be issues.
Yeah, but there's currently anyway, that system
There
is
is.
already in
There
place
is,
and that
yeah.
interest is applied.
There
If
is
it's greater
interest.
than, the
An
underpayment, direct
yeah.
debit is greater than.
So we always say the same, there should be make sure that 90%. isn't it?
Should be 90%.
Yeah.
Okay, and again, anybody who's on the quarterly or a 6 monthly
Same.
payment schedule, they'll remain the same. Okay, just to clarify that. So we only have a few questions left there. Will expenses and subsistence be visible on the weekly submission or only taxes deducted?
There'd be no, expenses and
No non-taxable.
No,
yeah, but they won't be
Yeah.
in the weekly, on the periodic submission.
Just bear with me now, just trying to, what if you're working on a week-one basis for, these are preschool teachers who sign on for part of the year? Will social welfare be doing their weekly update?
Well, we will have a feed from social welfare, so we'll know if they're in receipt of a DEASP payment. So that will be taken into consideration in terms of their credits and rate plans.
So will they be adjusted in the year?
They'll be adjusted, yeah.
Okay, most employees do not understand the PAYE system with regard to tax credits and cut-offs in the My Account facility. In our experience, employers send employees to us to access their facility and allocate credits. How will revenue ensure that employees access My Account?
Well, we can't ensure that they access My Account, but, we'll be encouraging them to access it, and certainly we will have a campaign for employees towards the end of the year. And we are making it as user-friendly as possible with explanations of what they will be required to do and how they'll be able to view their information online. So, I mean, we will be doing our best to get people to interact online. Some employers have told us that they're going to continue to provide P60s for their employees. We're not insisting on that, and most employers are quite happy to be relieved of that administrative burden. So, you know, again, that's back to looking at your current business process and what you're going to provide for your employees or clients.
I suppose a lot of employees will probably end up logging in just in pure nosiness.
Curiosity.
To see that I want to make sure the employer is actually returning, you know, because they'd be concerned about their stamps and whatever, you know.
Yeah.
I suppose, you know, if they're not willing to log on to the My Account, the fallback probably would be direct them to the 1890.
Okay. We've had situations where directors are put on the P2C certificate with a full PAYE credit and not the earned income credit, so too many tax credits given. We usually have to manually adjust this. If we download in the new system, will this default each time to the incorrect tax credit, and will we have to manually adjust each time?
I guess it's probably, if you remember Vicky's demonstration of the UK system, where you were able to tick, say, the employees who had new or updated credit information, you were able to tick or untick as to whether you wanted to bring that information in. Again, in designing the system for next year, we have to decide whether to allow that sort of flexibility or not. I know the instruction is that if revenue tells you what the credits are, that's what you're meant to use. I know it's difficult though if the amount you know is incorrect.
It's incorrect, yeah.
And
so
I would agree with that. We've had numerous cases where directors' tax credits are incorrect. Yeah.
So I don't know what the right answer to that one is yet, but we're working on designing that around that sort of issue where there's transparency and where maybe there's a little bit of flexibility allowed. But I suppose the official line is always that you use whatever revenue says, even if it's incorrect.
I think a lot of the, you know, sort of incorrect application of the tax credits is because of the way possibly the directors have or haven't been registered with revenue, and, you know, it doesn't always, like from the data alignment exercise that we've carried out to date, there certainly seems to be a lack of information about how to actually manage the directors in terms of registering them as employees, etc. So I think, you know, as part of our guidance, we certainly will concentrate on what should and shouldn't be done in respect of directors, and probably have some type of FAQ to go with that.
Yeah, because I mean, obviously we don't want to be applying too many credits, because then they're just going to have an underpayment in terms of tax. So. Yeah.
Okay, will individuals be able to claim expenses after the year end via Form 12?
Yes.
We touched on that already. You were saying it may even be that they can do it more frequently.
Yeah, we're reviewing all of those processes, and I suppose the fact that we're getting information in real time does allow us to do a lot more things that, you know, heretofore we haven't been able to, but it won't be in the initial phase of the system going live, because we're concentrating on getting payroll information in and making sure that that's all working effectively.
Okay, just an interest. Sorry,
no, I was just going to say we're probably running a bit tight on time.
That's fine. There's just one more question.
Okay.
The last one. If the company operates an internal payroll department and also engage an external payroll consultant, what's going to happen? So I suppose when you've maybe got possibly multiple payroll set up, do you submit 2 RPMs or do you need to consolidate the 2 payrolls?
Very good question. And we were only talking about that one this morning because things like employment IDs and things that are complicated in those scenarios.
I think it's a completely different
employees. They're probably being paid in different pay runs, I presume, as well.
Yeah.
So it's on a pay run that you'll actually be submitting the PSR. So if there's 2 pay runs in the 1 week, geographically different or whatever, there should be 2 actual submissions made. That's my own thoughts on it.
Yeah, I would say 2 separate submissions. But again, we are looking at getting sort of dual access where somebody has maybe a payroll agent and maybe, you know, a tax agent, or, you know, they may, so we are looking at options there. I mean, it's not really clear from
maybe it's not as might be
as payroll. On it might be where you might have an internal payroll processor within a client's company, and that's to do with all the employees, and then they might engage the accountants to do the director's
The
payroll.
executive payroll, yeah. So then you would need, you'd
Separate
have two
submissions.
separate submissions.
So they both obviously need to, their digital certs, you know, will need to be in place for, I suppose the
In place,
accountant would
right.
have the agent certs anyway.
Yeah.
So yeah, it'd be two, in that case, I think the answer is, will be the separate submissions.
Okay, so that's all the questions. Now, we did have a question in from just somebody watching it, from an attendee. Just they have a list of questions, so they do want to, I think, just put them all up. So if they want to send them up to us, maybe to support at thesaurus.ie, we'll certainly take a look at those. Also, we have a question about bank holidays, and wasn't ignoring it intentionally, but what we'll do, we'll maybe contact that attendee directly just to discuss the bank holiday calculation there. Okay, so that's all the questions in.
Okay, and thank you very much for joining us today, and thank you Sinead for coming along and helping, and Sandra, and hope to see you again on some other webinars throughout the year. Okay, thank you.
Thank you.
Thank you.